Let's look at the substantive procedures when it comes to self-constructed assets, like the entity constructed its own asset. It can be something like a building. So self-constructed assets, here we are going to verify completeness and then valuation to ensure that all the self-constructed assets are recorded, and then if they are recorded at the correct value. So the first substantive procedure is verify material and labor assets and labor costs and overheads to invoices and then payrolls. Remember, when you are constructing something, there are a lot of expenses that are included. Like you have to buy materials, which is material costs. You have to pay labor, which is labor costs. Then there are those overheads. So you verify the material and labor costs and overheads to the invoices and then to payrolls to make sure if they are matching. Like you, for example, the labor costs, like you match the labor costs to the payroll to see if they are actually matching, and if there is a difference, that difference should be investigated. Then ensure that expenditure has been analyzed correctly and properly charged to capital. Remember, we have capital expenditure, then there is a revenue expenditure. So ensure that capital expenditure has been properly analyzed from revenue expenditure. Another substantive procedure is you can review the costs that were incurred during the construction to ensure that no profit element has been included in the costs. Then lastly, you can review accounts to ensure that finance costs have been capitalized. Finance costs, we have things like interest, have been capitalized for qualifying assets. Qualifying assets are those assets that take a substantial period or some good time to get ready for their intended use. Like if it will take like maybe a year to construct a particular building, maybe 2 years, stuff like that. Those are qualifying assets. So you make sure that the costs capitalized in the period do not exceed the finance costs for the period, and that it will comply with IAS 23, which is borrowing costs. So those are the substantive procedures when it comes to self-constructed assets.